Hello, everybody. Welcome and thank you for joining us for another episode of Arthur's Roundtable. We're super excited to have Michael Thrasher, who I just had a chat with recently, but I've been noticing his newsletter in a subject or a topic that many of our people in the audience are interested in, and that's family office stuff and family office adjacent information. And so I really was fascinated by how this all came about. And so Michael's going to share that with us for a little while, and then we're going to ask him a bunch of questions. And please feel free, Michael, to contribute anything that you think that the community would benefit from, or if you just feel like talking about stuff. So,
Sure.
yeah. So with that, I'm going to ask you first because many people forget to ask the question, and I'm not saying I'm special in that way. Actually not, but what's Modus? What's that stand for?
Sure.
Yeah.
Yeah. Well, I guess I'll start with like the word. A lot of people are familiar with like modus operandi
Yeah.
and some of the other sort of related phrases. A modus is just sort of a mode or procedure or way of doing something or approaching something.
Yeah.
So that felt very fit for a name for a publication that does news for professionals. This is
I like
and
it.
if this is a thing, yeah, Modus is. Maybe I'll sort of digress really quickly. It's an independent media company that I started. I bootstrapped this business. I don't have any investors, and but what it really is this weekly newsletter that I send out to family office professionals.
Yeah, and it actually ended up coming to my attention, aside from seeing it from time to time in LinkedIn or in some feed that I would have otherwise gotten. There was a group of people that I don't want to say it's uh, like a WhatsApp group, but there's a group of people that are sort of interesting in the space that we think a lot of that listed the newsletters or the things that one would want to pay attention to and subscribe to, and yours was on there. And I had known about it prior, but it was, I think, a meaningful endorsement from, I can't even remember where it came from, but I remember it being meaningful. So there, yeah, who the person was. But so tell us your career history is interesting. So tell us a little bit about that.
Yeah. Well, I'm happy to hear that. Yeah, I just started. I should have said this maybe a moment ago, but I only started the company late last year, so really only about 6 months into sending the newsletter, and only weekly. So I haven't actually sent, when you think about it, that many emails to people. But it has like made its way, onto some lists and shared around and things like that, which is a sign that it's doing at least a good enough job to grow and catch people's attention. Although
Yeah.
I think there's a lot of ways to improve it. So yeah, I'll tell you a little bit about myself, and then happy to talk about any pieces or parts of this more if you'd like. I grew up in Northeast Ohio. I went to university in Ohio. I worked at a daily newspaper in Ohio, and then about 12 years ago moved to New York City. And most of that 12 years, I've been a journalist, and I've been writing about some part or corner of wealth and asset management. Um, and most recently, I was doing that at Institutional Investor Magazine. So I was doing a lot of exactly what you'd expect. I was writing about the public and corporate pensions, endowments, foundations, and actually also I was especially spending a little bit more time. Uh, uh, I had a colleague that was really spending, I think, most of her time writing about the institutions themselves, those big alligators, and I was spending a little bit more time writing about their engagement with the asset management industry.
Mhm.
And then in the background, though, what was happening was at least like anecdotally, I felt like there was an increasing number, or I knew an increasing number of people who were leaving some of these places to go work for a private investment office. And I just felt like that was so interesting.
And
Um,
the trend in the
it's a
making.
yes, yeah. I mean, I knew that the number of offices was growing, but I admittedly it was not a group of investors that I was paying a ton of attention to. And so I got I was just out of my own curiosity getting to know some of those folks a little bit better. Um, and one of the things that a lot of them had in common was that they felt like they were a little like basically sort of like journalistically underserved.
Mhm.
There's no shortage of, especially now, newsletters and small publications. The cost to start an independent media company has fallen basically to the floor.
Yeah.
And so there's, been this, especially in recent years, this like proliferation of like super specific and actually like quite high quality and valuable resources for all kinds of professionals. And so it was very weird to me to hear professionals working for family offices, considering their influence on, if they're still an operating company, their influence on the industries that they are working in, on philanthropy, on wealth and asset management, and politics, and all of these things. For that group to feel a little underserved seemed odd. So I sort of took a bunch of my past professional experience and felt like that was a great opportunity. And I felt like to really do it as best as it could be done, I felt like I needed to start an independent media company, and so that's what I did.
Yes, totally makes sense. In terms of oftentimes people talk about family offices and they either confuse the two or don't segregate out the single family offices as opposed to the multifamily offices. Were you seeing this largely in the multifamily offices and they were underserved? Or can you make the same, were you observing the same trend and lack of coverage, so to speak, in the single family offices as well?
I'm really talking about single family offices.
Good.
I years ago actually spent a little bit of time writing about private wealth managers, really sort of everybody ex single family offices. So I'm relatively familiar with that, with those companies, at least generally. And if you're I would sort of, there's a little bit of a sort of barbell in wealth management. Like if you are one of the handful of really large single family offices that have, in some cases, right, like hundreds of employees dedicated to like the huge breadth of responsibilities that offices have. Those offices have like quite a lot of scale, right? We're talking about offices that are responsible for many tens of billions of dollars in wealth and assets. They have quite a bit of scale and resources, and if they don't literally also have an asset management business alongside that office, they are in many cases operating very akin to like some of the best GPs. But that's obviously its own category. They aren't really representative of most offices, right? And then if you go to like totally the other end of the spectrum, like you're sort of more typical private wealth manager or financial advisor, there's also a ton of resources and stuff for those people. There's the independent RIA space has grown tremendously and become much more sophisticated. That word I feel like comes with a little bit of an asterisk because there were a lot of very smart people running really great companies. Uh, that's been going on for a long time. This
Mhm.
is not like
Yeah.
a phenomenon, right? Uh, uh, but there's all kinds of, there's a long list of really good trade publications and things dedicated to helping those professionals do a better job of serving the client who's,
Wealth
in all likelihood
managers,
worth
sort of.
$20 million or less.
Yeah, exactly. Is it,
But that middle part is underserved, right? Like if you're the sort of typical family office that might have, like a few $100 million in wealth and a huge breadth of responsibility, and there might only, the average office, it might have 10 or a dozen people. Most of them have fewer, right? They're like full time. That's uh, you're sort of, this is probably an oversimplification, but you're sort of dealing with very typical small business problems, right? Like imagine a really successful small business where, you know, you've got some resources and you've got some people, but these things are not unlimited. You can't just, the budget is not unlimited. You can't throw bodies at problems, but there's, especially in some cases, quite a lot of complexity. and just only so many hours in the day. So you're just on a rolling basis trying to figure out how do we best serve our sort of mission or objectives. And that's really the group that felt like it was, to me as a journalist, I sort of observed like falling through a sort of like a weird information crack, or at least a journalistic one. There's tons, actually. There are exist. This is not a novel idea, right? By any means, there's tons of people, right? Yourself and others who have, valuable newsletters, podcasts, and things. But there's a far shorter list of like truly independent journalism. Um, and I'm a journalist. I'm somebody who doesn't. I don't. I don't feel like I'm necessarily like competing with a lot of those folks. I think there's like a lot of space to have independent journalism alongside people who have different professional backgrounds and are producing or doing something that is valuable to these folks. Not, it's a big green pasture is maybe like a good metaphor.
Yeah.
And, I don't know, I'm a cow wandering around in there now.
Yeah, but I don't mind saying, just from my perspective, it's refreshing for somebody to practice journalism as opposed to something else, which a lot of journalists have become something else, right? And I'm not talking within the scope of our business, the family office world. I'm talking about in general. So it's refreshing to see that happening, like because I've seen your work and it's hard. You're not just repurposing somebody else's stuff, right? And it's hard work. What do you think about
Yeah. Yeah.
um and this is going to sound disparaging, but it's not meant to be. So the big bulge bracket firms, when family offices 10 years ago or so became a thing, they all decided that they were going to have family office divisions so they could lure in higher AUM and decide to do some of the stuff that, single family offices wanted, whether it was, managing properties or doing estate planning. But the question I have is that many of the single family offices I know have relationships with big banks because they want access to their balance sheet. And they'll throw a few $100 million for them to manage just so they can hypothecate that in the event that they need to borrow money at 2.5%. And I'm just being specific on purpose, right? Are you finding that the the banks, and you know who I'm talking about, they're all the big ones that have family office sort of chassis. Are you finding that they're doing well on behalf of these single family offices that just want to have investment banks or bank balance sheets to execute on things in the event that they need to with their balance sheet, for example?
Sure. Sure. I think I'll answer it this way, and hopefully this gets to your question, but we can talk about it more. I think that for a long, long time, a lot of organizations, whether you're a lot of businesses, sometimes within a large organization or not, be it an investment bank, an asset management business, a private bank, um, everyone has seen, especially over the last 10 years, the growth of the number of family offices and their wealth, and has been scratching their head, if they weren't already, trying to figure out how do we engage this group of investors? Because
Yeah.
there's probably some way that we can service these people. If we've already done it for so many others, and we've done that well enough that this business has grown, far more people have walked in the door with assets than out.
Mhm.
Um, like how else do we find more of these people and make them a customer? And there's been, I think this is going to sound like I'm sort of sidestepping the question, but I think it kind of depends on the the institution and how old the office is. There's like so many factors to sort of measure the success of that, right? Um, some organizations that have some of like the largest investment banks that also have an asset management business and also have a private bank and all these things, they've been doing those things for a long time, and they for many years have thoughtfully been trying to make all of their customers, whether you're a family office or not, a customer of all the parts that make sense for that organization. Now, some people, like what sort of base they started on and what base they're at now. There's like degrees of that. Some of the larger organizations have been very successful at that, and other ones have been successful at part of it, but not another, at least on some relative basis. I mean, I think if you were to ask any of these folks at some of the larger banks about this, I think the general answer you get is that number of offices is growing, and their complexity, uh, uh, just if you even just their investment management, let alone everything else, they
Right.
are getting more complex. And one of the ways that big organizations can help them manage that complexity is sort of showing up with like that toolbox of all things and helping them realize, if you need a hammer, we got a hammer. You need a Phillips, we got a Phillips
Mm.
screwdriver. So it depends. I mean, they're working toward those things, and a lot of organizations seem to be making at least some kind of progress. But there's tons of family offices that for a brand new family office and someone establishing that, having that whole thing, that whole toolbox, and somebody show up and walk you through those things, and then comparing side by side,
I think so
extremely
too.
valuable to do that
Yeah.
the
Yeah.
first go round. But for a really large established office that is really writing big checks and investing directly in companies, or in some cases even trying to acquire companies, they're in some ways like kind of just another investment bank, another client of the investment bank. They
Exactly.
might not need or be interested in the other things, and the organizations I think are doing a better job of um, helping them too. They want to do business with this group of investors. However, that investor wants to do that, they're very happy to show up for that in that case. That was a very long-winded, hopefully somewhat
No,
satisfying
no,
answer.
you got it. It felt good. It's very satisfying. Thank you.
Okay, that's good.
Yeah, yeah. Um, so I'm gonna tell you what I've seen, and I'm just wondering if you've seen the same thing. For example, there are single family offices that have made all their money in a certain asset class. And uh, maybe it's the second generation that's exited. But the one asset class that seems to me to be pretty consistent, that they generally only have two types of investment, is the real estate family office. They have cash and they have real estate. And are you finding that also to be true? Unless it's like maybe four generations out and they shed the desire to be in the real estate business and they just have to keep their stay rich money, so they put it into diversified portfolio. But is that still a thing where the real estate people are largely in cash and real estate? Have you found that?
I'm not sure. I mean, the so this comes with a footnote because it's only a snapshot of some of the offices. But if you look at these annual reports, especially from the banks that have like pretty good insight into their investment management, you look at their strategic asset allocation, there's obviously the average family is obviously pretty far away from only real estate and
Yeah.
only cash. They've got like a pretty diverse portfolio, but most of those surveys are they are surveying, it's only a couple hundred offices, and most or all those offices have assets in excess of 1 or even 2 billion or beyond. So again, that gives you a snapshot of what those offices of that size are doing in terms of their investment management, but it's not necessarily indicative of like the broader, the whole universe, right? It sort of comes with, like I said, that like footnote. The real estate families are interesting. Like in some ways, this is like the ideal scenario. You've got this asset that you're not terribly worried about marking to market quarter over quarter because you own it. It
Mhm.
generates quite a lot of income for you. It supports your lifestyle. you might be holding some in cash and doing what you've been very good at already, which is like continuing to build that real estate portfolio. And they have also a lot of those families, like they have that luxury. They hold a lot of cash because they understand that real estate cycle and these advantageous periods to purchase are not coming quarterly or even annually, right? They're in some
Five,
cases coming
seven, 10 years. Yeah.
much less frequently. Exactly.
Yeah.
I mean, it's sort of hard to look at those folks, and I suppose if without any context, you could look at their investment management and be like, what the hell is going on here?
Yeah. Yeah.
On the flip
Concentration
side,
risk. Right. Yeah.
yes, yeah. On the flip side, that's they're doing what they're good. They became very wealthy doing exactly that. So why would they stop doing that? You know, I think to your point about later generations, and this is not unique really to real estate. This is unique to any office with a super successful, right. Most offices, right. A lot of these folks are not. It's only, I don't know, I think roughly about a quarter of people that have like a singular big liquidity event, and then sort of are done,
Yeah.
right. The vast majority of these people have an operating business that has been very successful, and that continues to generate a lot of income. It supports their lifestyle. They invest that money, and I don't want to oversimplify it, but if you have that, if you have that machine going for you over dozens of years, half a century or more, and you've been pretty smart about it, you sort of wake up one day and realize, like, oh my gosh, we're worth like quite a lot of money
Yeah.
now. And that's amazing, and that's terrific. But like younger generations, they don't have the same interests,
Hmm.
and so if you, uh, you know, say they decide to sell that operating company, they're still fantastically wealthy, but they might not have that same kind of income generation. And then also, as more generation, as you go, as time passes, the rabbit math is hard for a portfolio to continue to support. There's just so many more people, so much more complexity, and so you might it might be worth considering a more diverse portfolio because the objectives, right, for that portfolio are going to be a little bit different. So it's hard to say, like, are these people doing something right or wrong? It's like, I mean, one, I guess it's their money, so
Right.
who
Yeah.
cares? But also, like, the offices have and families like have this life cycle. So if the real estate family does that, if they've been doing that for 100 years and they want to continue to do that for 100 years, great. But who knows, someday down the road, that might not be the thing that like the family is interested in or is actually best serving the family. That's like a real possibility. They just haven't, maybe a lot of those families just haven't reached that point yet.
Yeah. And even though we have lots of members, I will admit that most of the families that I know that are in real estate are the big New York families in real estate. And so what people do in New York is markedly different than they do in other parts of the country, for example, and never mind the rest of the world, right? So
Yeah, real estate
idiosyncratic
is
to New York.
hyper local. I mean, it's like true. So many of those so many of the adages about real estate like do sort of seem to be do seem to be true. Like, you can be fantastically successful and knowledgeable about one market. It might or might not be terribly useful in another.
I had a real estate investor, the matriarch or patriarch, sorry, made all the money, and he was considering buying real estate, and the cap rates were so low at the time, 3%, it was low. And when he pulled the trigger on a $300 million building, the explanation was, I paid cash. I'll lever it up later if I need it. But where else am I going to get 3% and have the asset? Right. And so and I know what to do with real estate. So his rationale was, yeah, I might be leaving 200 or 300 basis points on the table, but I've got all the tax goodies that come with real estate. I understand how this is done. I may have paid too much for the building, but I'll hold it for 30 years. Who cares? Right. And it's New York.
Yeah,
So,
yeah. I think something that certainly that people talk about, but maybe not enough. It's sort of easy to forget about this when you get into the weeds about like portfolio construction and things like this. But but you know, like for someone like that, they're probably sleeping a little bit better at night than choosing to divest from certain assets or even certain asset classes, and then start investing in things that even with excellent partners, be it an investment consultant, an OCIO, asset manager, whatever, or some combination of those things. That if it's not something that that's just like a different level of comfort. And
Right.
so, after, after you become, the I don't know exactly what the sort of, the, I don't know exactly what the sort of income level is, but it's in the world of family offices, like dramatically lower than most of them, right? Your quality of life after making, a couple $100,000 a year doesn't, uh, the quality of your life doesn't scale with another $100 million
Right. Right.
exactly, right? And
Right.
so at that point, you're really this is the offices are created to uh, you know to achieve whatever it is that the principal and families want to achieve. And maybe it's just like making those things stuff that they don't have to think about anymore.
Yeah.
And
Yeah.
then maybe it's
Relieve the
choosing
pressure.
continuing
Yeah.
exactly choosing real estate because like I understand it, and I don't lay there in bed thinking about it versus other things. And
Yeah.
that's kind of hard to put a that's kind of hard to put a price on,
But obviously
especially like
one
as a new
that's,
business owner. I get what
yeah,
that's like.
yeah, right. Obviously that one that you can, acquiesce that's worth something, right? You don't know exactly what it is, but it's worth something.
Yeah.
Yeah. We've seen a little bit of trend in people talking about sleeping well at night, deciding that and I don't want to talk about the next generation and what people do with their kids and stuff like that, because it's a whole nother topic and people screw up their kids all the time or not, right? But we've seen a trend of people saying, wait a minute, why am I stressing out about this? Right? I can do whatever I want. Let me just hire somebody to take care of all the legal stuff and count, do the spreadsheets. And then I mean, there's only so much. I think we talked a little bit about this. There's only so much golf you can play, but you can also be in a place where you're exploring other interests and not being tethered to having the CIO report to you every day to make sure you didn't, grab 20 basis points on the bond trade, right? It's not, I'm bringing it up because I'm wondering whether you've seen it, is we've seen people sort of say, okay, enough is enough. I'm only going to live 27 and a half more years. Let me just, enjoy the family and do stuff that I'm interested in. Have you seen
Yeah.
any of that?
I I don't know if I've seen that any more or less with family offices, honestly, other than I've seen at everybody.
Yeah, that's a good
This is
point.
just,
I like
yeah,
that. Yeah.
this is a thing that, I'm 37 years old. My parents are in their 60s. Many of my friends' parents are in their 60s or older. And, I mean, this is something that, I feel like most or nearly all of them are thinking about, which is now that I'm not working or I'm approaching this phase where I've been planning for a very long time not to work. What am I going to do?
Yeah. Yeah.
And uh, I think some of the answers for many of them are like pretty obvious. I'm going to spend a little more time with my family. I'm going to travel. I'm going to do a lot of the things that a lot of people uh, want to do. And you know, it you can do those things and spend, whether you're spending $1,000 on that trip or you're spending $100,000 on that trip, you're still only probably taking so many of those trips and doing so much of that time, and there's still some carve out of time where you have to make some decisions. You might decide you need or want to fill that with something. And then I think also, specifically the family offices, and especially like the first generation the wealth creators, um, the likelihood of somebody not really liking, the likelihood of someone being that successful at whatever it is that they've done and not liking it, I feel like is pretty low.
Yeah.
So to suddenly, cold turkey, decide you're not going to do that on any level anymore, just feels that feels odd. I've okay. Ask me again. I'm reserving the right to change my mind about this, but like 30 years from now, I think I would still, even if I've effectively stopped working, I think I'll still be doing some kind of journalism, even if it's just periodically or sporadically or something, just to, if nothing else, just to sort of keep myself in the industry a bit and up on it because I really like it. So I don't know. Unless in 30 years I suddenly don't like it as much anymore,
No,
it would
yeah.
just be very bizarre to just not do it. And so I imagine so many people are doing that same calculus.
Yeah, it's a very good point that in general it's trending whether you've got a lot of money or a little, because we all have the same amount of time, more or less, right? So where are you going to
Yeah,
spend that time?
that's
Yeah,
true. I think there's something I haven't. I can't be the first person to think about this. It's probably been written about quite a bit already. I'm sure people are talking about it, but I think part of the interest in longevity and healthcare that's really geared toward not just being healthy in this moment, but healthier as you age, and then extending one's life. I think part of the interest in that is simul twofold. It's to keep doing these things that we've been talking about. I also think it just sort of buys more time actually to like answer those questions, and in a way like uh, delay us facing our own mortality. Uh, I It's kind of hard not to. It's I always I could easily go down a rabbit hole and start thinking about that sort of thing. That's great that this idea of living 20 some odd years longer than the typical white male in America. Cool. I
yeah,
don't even know what I'm gonna. I have no idea what I'm gonna be doing in 20 years, let alone in 60 years, let alone beyond or whatever, however long I might live. So that doesn't like solve. That doesn't really answer questions for you, right?
yeah. I think it's super interesting, and there's obviously a lot of talk about it. And we're going to have some people on that have had some interesting approaches to that. Let's just put it that way. Um,
Yeah.
and it's for me, it's really simple. I did the calculation a long time ago, and my kids ask me, "So, what's the deal? What are you going to be doing?" Even though they know that I'm doing what I'm doing and have been for a long time. I said, "Listen, I've got 37 and a half more years left, and just gonna try to make the most of it." They, yeah, how did you come up with that number? I said, "Well, it wasn't me, right? I'm just guessing." Uh,
Right.
but it's you know, as you get older, you realize on some level, if you're paying attention, that you don't want to spend time with people that are, bad energy or energy sucks or don't make any contribution or just don't feel good. And yeah, there's only so much of that you can put up with, I think.
Yeah. Yeah. I
And
think I think you're right.
yeah,
I think this is something too. Modus hasn't it hasn't broached a lot of these topics yet, and that's not by design. It's just sort of the way that it's shaken out so far. But one of the things that I mean, from the onset of starting it, that I I I know and realize is that um, I will, because of my professional background and because of much of what most offices are doing, much of it will be much of Modus will write about their investment management.
yeah,
But the investment portfolio in this office is just an extension of it's just a means to this desirable process and like supporting the journey to whatever end, right? And so, but Modus will at least periodically write about some of these things, and it could be the structure and the governance and all of the sort of all of those things, right? That a lot of the best offices have thought at least somewhat about. But also some of these other things, like, how do you? Okay, all of this is great, but how are you actually, living your life? I mean, I think like the FT's How to Spend It is a great journalistic example of
Yeah.
broaching some of these things. Is,
Yeah.
you've
Yeah.
worked very
I
hard,
love
you've
it.
done all these
Yeah.
things, but like, what are you actually doing with any of this? What's like the point of it all?
Yeah.
And Modus it'll do, a little bit of that, for sure.
Yeah. I think people would be interested in that. It's, I don't want to go back to me, but you know, my sister said to me, and she had no idea, has never had an idea what I do. Like it's completely out of her scope of understanding. Um, and so she goes, "Well, wait a minute, you retired now?" And I said, "I don't think that's ever going to happen. Like, retire from what? Like, it's all mine. I'm not retiring from a company. It's all mine. I own everything, right?" So anyway, that's the way I answered the question. I said, "Why would I stop doing this? It's way too much fun." It's kind of like what you said about you'll probably keep on writing, right? Or periodically. That's in a periodical. That was a really bad joke. Yeah.
I still appreciated it.
Yeah. So, uh, can you tell us the subject matter of some of the past issues? And I know there's only been a handful that you found resonated with your audience the most. Just real quick, tell us. Yeah.
Yeah, yeah, yeah. I wish I had a more satisfying answer, because that would inform what I what I did more of going forward. There hasn't been a huge range, but like some of the most interesting things, at least that I've got, if one metric is not just the number of people that open the email and click on links, but if one metric is, the number of emails I get, the number of people that reply,
Probably
uh,
good
some
measure. Yeah.
yeah,
Yeah.
it's a pretty good measure. I got a lot of people. I interviewed a woman who, is effectively a person that helps people, book luxury experiences, among other things. So I wrote a little bit about, leading up to the Super Bowl. Like, how do you even, there are tickets for sale for,
Of course.
at the 50-yard line for $100,000
Yeah.
and all kinds of other things. But like, how do you actually, um, there's a shocking number of people that can afford that, and might be interested in that, but like, how do you actually get that ticket, and what is that process like? A lot of people emailed me about that, and just thought that was,
That's interesting. Yeah.
interesting, and yeah, yeah. But
Yeah.
I've gotten, I've also gotten a lot of emails. I got quite a lot of emails about, a report that I did some reporting about. In short, uh, how small endowments and foundations are choosing to manage their portfolios. Those institutions that are in the couple $100 million and less range, um, that's akin in size to most family offices, single family offices.
Yeah.
Those institutions are increasingly, relying on OCIOs for at least part of, if not much, in some cases, or all of their investment portfolio, for a variety of reasons. And, if family offices talk about and are interested in preserving wealth, and investing with a horizon of, a century and beyond,
Yeah.
um, this is how institutions are doing that, which is a little different than obviously what many offices are doing. And so,
Yeah.
I got a lot of emails about that also. That was another popular email, I think, because, partly there's just so many different opinions about that. And so many sort of tangents and like sort of sub categories or subjects to this topic. So those are a couple, at least, like, top of mind that have, kept me. I always joke that, uh, I try to spend like a couple hours on the weekend, like for the fans, and reply to people and engage
Nice. Yeah.
as
Yeah.
much as I can. Yeah.
But at some point, you're going to become like Lex Friedman and Joe Rogan, and there's going to be so many comments on posts or emails, whatever. And Rogan says, I never look at them because when I did, it would just debilitate me. So,
Yeah.
and of course, he's in a different world, right? He's got haters everywhere just because he's so huge, right? Can't have that many. And anyway, at some point, you might post and ghost, right?
Yeah, maybe.
Yeah.
Maybe. I always joke that the perfect level of wealth and celebrity is like to be an author, of a novel, because like most people, even if they've heard of the book or even read it, they might not remember your name, and they
Right.
probably don't know what you look like. So you might be.
I
There's a small
like
number
it.
of these people, but you could be super wealthy and then like still go to the grocery store and no one's gonna bother you.
Exactly.
That's really the perfect thing.
Yeah, it's kind of an imposition if you're always being recognized because people are annoying. New York City's different in that the New Yorkers don't bother people that are celebrities in general, just because there's so many of it around. But, somewhere else, they just get their knickers in a twist and start doing stupid stuff with selfies and so forth. Yeah. Yeah. It's an interesting human habit. Yeah.
Yeah, I think thankfully I'm at probably a pretty low risk for that, writing about doing
We
media
will
and writing about
see.
writing a newsletter for family offices. But I don't know. I suppose if I end up with that level of notoriety, I guess there's maybe worse problems to worse problems to have, I suppose.
Yeah, the no, it's not notoriety, but I have always been amazed that in New York City, city of 8 million people, I'd be walking down the street and invariably there's somebody I know, right?
Yeah.
And it just happened this weekend. We were walking into a restaurant and someone yelled my name, and I only had been here 24 hours, right? So it's really, of course, we frequent the same places, so it's not that surprising, but yeah, the city's an
Yeah,
interesting place. Yeah.
that's true. The city, as big as it is smaller than we think. I guess you could say the same about, the world in general. This place isn't. It is
Yeah.
both huge, but not
No
terribly
doubt.
big.
So what would be helpful to you? Let's just talk about this in terms of your business. More subscribers, more advertisers, that sort of thing. Can we just talk about that a little
Yeah,
bit?
yeah, yeah, totally. So I'll give you a snapshot of the business itself. There's over 1,200 people subscribe. There's well over a couple hundred single family offices, or employees of single family offices, I should say, uh, who subscribe. And these are folks that I can actually do some kind of due diligence on. This is a real person. This is a real
Right.
office.
Yeah.
There are probably more, but my rule is I try to spend no more than, like 3 or 5 minutes, maybe sending some messages to, I just sort of doing journalism, trying to figure out, like, is this a real person? Is this a real office? What can
Yeah.
you tell me about folks or whatever? And but we don't ever share information with advertisers or anybody. This is just purely for my own uh, curiosity, I guess you could say.
Yeah.
And then there's another, there's hundreds of other, I'd call them like folks in private wealth management, who are doing something. They're like a private banker who engages with family offices because they are doing some asset based lending, or they're trying to get a loan for some piece of art or whatever. And then there's a lot of wealth managers at especially places like JP Morgan or Goldman or some of the larger independent RIAs, that they have clients who don't they're quite wealthy, but they don't really need or have the scale for a single family office, but they're still worth, like 50, 60, 70, or maybe more, $1 million. And the experience that they expect and their complexity is starting to sort of overlap. There's that big gray area, right? That those multifamily offices are trying to fill, which is, this person, they're not worth a couple $100 million, and it's not obvious maybe to start a single family office, but they still have a lot of wants and needs. So there's a bunch of those people that subscribe, and then the other sort of, a third of the list are sort of everybody else you'd expect. It's like accounting and consulting firms, investment consultants and OCIOs, the coverage groups at some of the asset managers, the short list of those people at the investment banks who engage with families, and a lot of like software service providers, a lot of people like yourself. So it's a huge, it's family offices and family office centric, certainly professionals, but it's still actually like a pretty vibrant, diverse ecosystem of subscribers, I guess is one way to put it. So to answer your question, is like any of those people, any professional who sort of checks any of those boxes could get hopefully something out of the newsletter.
Yeah, they'll
Like,
benefit from it, no
yeah,
doubt. Yeah.
yeah. And I think it helps too that I've very thoughtfully. I mean, I only send it once a week. It's free to subscribe. It rarely takes more than about 10 minutes to read. It's usually less. And certainly like the journalism, which is like the first like half of it. It's very sort of I always say it's very sort of value oriented. Like I try to think of the reader not as like some name on the list, but as an actual person and a customer. Like what can I tell this person, this customer that's going to be valuable to them, or it better be pretty damn interesting.
Yeah. Yeah. So, look, I don't need to promote you um, without saying I like it because I do. And so I think you've done a really good job. And
Thanks, I appreciate that.
I think people will benefit. And then what type of advertisers are you looking for?
I guess the short answer is all types. So far, so this is maybe one thing I should have explained. The newsletter is supported by advertising. I think, certainly most of the advertisers so far are software companies or service providers of some kind. And that's the reason is actually pretty simple. A lot of these companies are relatively small compared to like a big asset manager. So they fit very nicely in terms of their uh, marketing resources, budget, etc. That's just a nice check size for my audience size.
Yeah.
And their sort of stage of growth, like a lot of them are also, they're simultaneously doing paid media to try and uh, they're trying to fill their marketing funnel in all kinds of ways, even if they're small. But there's just not a lot of ways to like do brand marketing and sort of fill your marketing funnel at the top until you're a huge firm and have a big budget. So that works pretty nicely for me. And over time, it'll change. The readership will grow. It'll be more costly to advertise, and I think it'll end up being some asset managers and maybe some other folks. So it's a mixed bag. I also just like I try to think of readers as customers. I I really try to be a partner with advertisers. Advertisers have no impact on what I'm writing about and how and things like that. Many of these things this is all decided and that check is cashed well before
Yeah.
I'm writing the
Writing
newsletters.
something, yeah,
Obviously,
yeah.
it couldn't have a dramatic impact on it if I wanted it to at that
Right.
point.
Yeah.
But they I try to I'm quite transparent about like what Modus can and should deliver and what they can expect. And I try to be consultative. I want them to be satisfied with the money that they've spent and call me next year in that same month and want to advertise again.
Yeah. Totally makes
Um,
sense. Yeah.
from a operating standpoint, Modus is I'm the only person working full time on Modus. So every hour I can save myself doing anything, sales or otherwise, is an hour of my life I get back, or I can do something else. So it's been, I actually should, sort of selfish, but also selflessly. I've had like terrific advertising partners thus far that have been super helpful and have really like reciprocated a lot of transparency about how they think about their marketing and I mean they've certainly already improved my business in just 6 months. Like
I'm
those
sure you've
handful of
learned from them.
advertisers.
And
Oh yeah. It's a total two-way street in terms of what the bang for your buck. There's a lot of people it's not a fit for, and that's fine. But there's been a great pipeline of folks. And yeah, I truthfully like very lucky. I mean, that's a luxury that is really afforded to me as a journalist, an independent journalist, because of the type of journalism I'm doing in the audience. There's tons of terrific journalists, but there just isn't the same interest or concentrated interest in ad dollars chasing, and for so many reasons. I'm just
An easy
very
yes.
lucky in that regard. Yeah,
Yeah.
yeah, totally.
Easy yes. Super. Well, this has been, hopefully, well, the Arthur's Roundtable podcast is at nascent stage. And so while we don't have a lot of subscribers, we have 22,000 subscribers to Family Office Insight. So we'll share this with them, and hopefully you'll grab a few good subscribers from that, and maybe some advertisers that at some point might engage. So happy to do that.
Sure, I really appreciate that. This is um I'm getting to do like two things. The thing I really love most, which is journalism, and I also get to scratch the itch, which is like just fascinating stories about financial services, and also like the people and family offices. It's I can't really think of something better than Modus to like check all these boxes. So anybody supporting it in any way, even if it's an email saying keep it up, that makes my day.
That's good to hear. Well, I super appreciate you doing this and spending some time with us today, and I appreciate the newsletter, and really this has been fun. So love to do it again at another time for sure, but we'll make sure everybody gets a chance to take a look at this on our distribution for sure. And I want to thank you again. I really appreciate it.
Yeah, thank you. No, the pleasure's all mine. It was great to visit, and yeah, looking forward to the next time.
Yep. And thanks everybody for tuning in. We'll see you next time. Thank you, Michael.